Good morning, viewers. It's Wednesday morning, March 19, 2025, and I'm your host, Sunil Thakker, our Sunny Talks Money. Welcome to ST Money 7 a.m. early morning news, where we provide you the latest, concise, and precise stock market wrap with accurate figures and numbers. Heavy selling resumed in Wall Street's largest technology companies, with American shares snapping a two-day rebound amid signs investors are paring exposures in U.S. risk assets. A tech sell-off and renewed turmoil in the Middle East sent stocks lower on Tuesday. U.S. stocks fell on Tuesday to snap a two-session streak of gains as investors exercised caution ahead of a monetary policy decision from the Federal Reserve. The Fed will release its latest policy statement on Wednesday, where the central bank is widely expected to keep interest rates unchanged, along with its updated summary of economic progressions (SEP). There's just great uncertainty about the tariffs, how extensive they are going to be, how that's going to impact economically, and how much the Fed might ease eventually. And when there's confusion, there's no real opportunity for stocks to go up and for companies to expand and make more money because there is fear. The US economy faces headwinds from erratic tariff policies, weaker growth forecasts, and stretched market valuations. Following a two-day rally, the drop came in spite of absence of trade drama. The communication services and information technology sectors were Tuesday's worst performers, extending a stretch where last year's market darlings with high valuations have been hit the hardest. At close on Tuesday, the tech-heavy Nasdaq Composite led losses, falling 305 points or 1.71%, 17,504. The S&P 500 was 1.07% lower to 5,640, while the Dow Jones Industrial Average shed 0.62% or 260 points, 41,581. Stocks had recently shown some signs of stabilizing after several weeks of declines that sent the S&P 500 and Nasdaq down more than 10% from their recent highs, also known as correction territory. The blue chip Dow Jones is slightly more than 2% away from reaching correction levels. Historically, similar levels in sentiment have coincided with at least a short-term bottom in US stocks, although it is not clear that this is a capitulatory type move that generally marks the bottom. Meanwhile, Trump's push for a rapid end to the war in Ukraine continued with an official call with Russia's Vladimir Putin. Trump's stance on the conflict has spurred a rearmament drive in Europe. The Russian President Vladimir Putin and US President Donald Trump agreed to seek a limited 30-day ceasefire against energy and infrastructure targets in Ukraine, while talks aimed at advancing towards a bigger, broader peace plan will begin immediately, the White House said. Growth stocks were among the hardest hit, with the S&P 500 growth index as much as 2.2% during the session. Communication services down 2.14% was the worst performing of the 11 major S&P sectors. Adding to inflation concerns, U.S. import prices unexpectedly rose in February amid higher costs for consumer goods. Alphabet fell 2.2% after the company said it would buy Wiz for about $32 billion in its biggest deal as the Google parent doubles down on cybersecurity. Nvidia was the worst performer in the Dow Jones shares as the chip maker declined 3.35%. CEO Jensen Huang said that the chip maker was well placed to navigate a shift in the artificial intelligence industry, in which businesses are moving from training AI models to getting detailed answers from them. Tesla stumbled 5.34% after brokerage RBC slashed its price target on the EV maker's stock to $120 from $320, citing reduced expectations for its full self-driving pricing and robotaxi market share. Its shares are now down nearly 45% on the year. In Tuesday's other action, the dollar spot index was little changed. Benchmark Treasury yields inched lower, reversing an earlier advance of stronger than expected data on housing starts. Benchmark 10-year yield settled at 4.280%. West Texas Intermediate crude fell 1% to $66.92 a barrel. And reflecting the defensive tone Investors moved to safe haven assets as gold prices rose for the sixth straight session and hit another record high, rising 1.2% to about $3,000 to $3,035 a troy ounce. Bitcoin prices stood at around $82,000. That's the wrap for today, my dear viewers. And if you get value from this, please do subscribe, like, and share this video as much as possible. You can contact me one-on-one at st@st-money.com for any further information. I will see you again tomorrow morning. In the meantime, happy investing, stay inspired, and remember, it is all about money.